This morning, the Bank of Canada announcing its overnight rate decision, holding its key overnight rate at 2.75% for the third consecutive time. There were many varying factors in this decision today, including trade-related issues and a very cloudy economic forecast. Not any certainty where the Canadian economy is going to go. The general consensus by most pundits looking at the rate decision ahead of time was a hold, and this was primarily due to the August 1st deadline, this tariff deadline between US and Canada, and the uncertainty surrounding where this is going to go, what decision is going to be made, and what deal is going to be struck between the Canadian and American authorities. Certainly, this was a major factor in the Bank of Canada's decision this morning. Obviously, this is where it affects Canadians. Those people with a variable rate mortgage are going to feel no change, no relief, so to speak, for those in variable rate debt, especially their mortgages. There is some uncertainty in terms of how this will affect businesses, more so on the trade issues rather than the rate issues, and obviously global sentiment on the Canadian dollar. Many people were calling for a rate cut as so many Canadians are experiencing financial hardship with increased inflationary pressure on prices, uncertain and unstable economic factors, which is leading into less and less confidence in the Canadian economy. And let's be honest, there's a lot of people who got these mortgages 4 or 5 years ago at ridiculously low rates that are probably paying 2 or 3 times the amount of interest on their mortgages since the time that they got them. The Canadian reality is this: the Bank of Canada sets the overnight or monetary rate, that is monetary policy, and the Minister of Finance sets fiscal policy, that is what the government is going to spend their income on. Both obviously have huge impacts on the economy. But let's focus on why monetary policy is almost impossible to get right. When the Bank of Canada sets monetary policy, what they're trying to do is set the temperature in a room by using a thermostat. But the problem is that they don't even know who's going to be in the room or what those people want the temperature to be in the future. And that's the challenge central banking faces when setting the overnight rate. But I want to go through a few of the challenges that the Bank of Canada faces when trying to set the thermostat. The first issue is when the Bank of Canada is trying to set forward-looking rates, is that they're looking at information from the past. These are things like inflation, GDP, or the growth of the economy, unemployment statistics, and general trade sentiment. Not only are these lagging indicators imperfect in trying to determine the future, but different indicators are going to affect different industries in many, many different ways. So, for example, one industry might be positively affected by a growth in GDP where other industries are not. We can't think that this uniform overnight rate is going to affect every industry the same way. The second issue, and this is a major one, and I know I've talked about this in the past many, many times, is that when the Bank of Canada sets interest rates and trying to predict what the future is going to bring, it doesn't necessarily mean that people are going to act in the way that the bank predicts. So the economy may have very different outcomes despite what the Bank of Canada is trying to forecast. And certainly there are risks of overshooting or undershooting what the rate might be. For example, if you turn the thermostat too high, people are going to start sweating. And if you set the rates too low, people might start to be too cold. What the Bank of Canada is really trying to do is not set the interest rate of what the money should be. What they're setting is the supply of money and what the supply of money in the economy should be. This is a much more difficult task than just merely setting the overnight rate. When the Bank of Canada increases the overnight rate, what they are essentially doing is taking assets off the reserves of the commercial banking system. And what that does is it reduces the ability for them to stimulate the economy or put more loans into the economy. On the other hand, when the Bank of Canada reduces the overnight rate, what they're doing is they're putting on more assets, more reserves into the commercial banking system, which encourages them to lend more money because they become more flush with capital. So therefore, it either stimulates or reduces the stimulus in the economy. Remember that setting rates is nothing more than increasing or reducing the reserves in the commercial banking system, which either stimulates or cools off the economy. And this leads to the problem of interventionism. Interventionism is where the government has an influence in the economy, not allowing the free market to set its own supply of money. As Hayek wrote in his book, The Road to Serfdom, which I highly recommend that you get a copy of and read it thoroughly, the government and bureaucratic apparatus will always argue for increased intervention. And this fleshes out as self-protection or self-preservation. That is, central planning with no feedback from the free market. Quite frankly, putting the decision on how much money Canada should have, what the supply of money should be, in the hands of a small committee is really madness. Just think about the power that's concentrated in a small group or committee that gets to set and decide what the thermostat in your room should be. Many people are arguing. They want more government intervention. They want rates to be set in the way that they feel that they would benefit the most. Borrowers want rates to come down. Savers want rates to go up. Everybody has their self-interest. And when using the power of the government to get your self-interest, we come into conflict. For example, the Canadian Federation of Independent Business just yesterday put out a statement demanding that the government not only enact counter-tariff measures, but also use those funds to direct people in their membership who are being most affected by these tariff problems. However, it could theoretically be argued that any business that needs government support doesn't really have a viable business. And it really should be the consumer that should be bearing the load of these tariffs in effect of the prices of their goods or services that they're purchasing from these businesses. Let's be honest, it's going to take a long time for people to start demanding economic control and reclaiming that control in their own lives. As Aldous Huxley once said, the greater part of the population is not very intelligent and dreads responsibility and wants nothing more than being told what to do. And until such time as people actually wake up to that reality, we are going to be stuck with somebody else controlling the economy of Canada. If you found this video helpful on the Bank of Canada's decision, how it affects your life, and a little bit more information on the rate decision today, go ahead, hit like, subscribe, hit that notification bell for upcoming videos.